One of the most common questions I see in QuickBooks Online is, should this be a sales receipt or an invoice? The answer matters more than most people realize. Choosing the wrong one can cause income to show up twice or not at all. In this video, I'll walk you through the difference between a sales receipt and an invoice, how they flow through your reports, and how to use each one confidently in real-world situations. Sales receipts are used to record payment after providing goods or services to a customer. For example, you would provide a sales receipt after a customer paid for flowers at a floral shop. Invoices are sent to a customer to request payment for goods or services with a payment deadline. For example, after completing a contract for the graphic design of a logo for a customer. You can think of a sales receipt as immediate payment and an invoice as delayed payment. This distinction affects where income appears and when. Sales receipts are recorded as income, so they show up on the profit and loss statement. Invoices are recorded as an asset under accounts receivable, so they show up on the balance sheet because money is owed to you. Once an invoice is paid, then the income shows up on the profit and loss statement. To create a sales receipt, you'll click on Create and then Sales Receipt. Then you can enter the customer's name, email address, the date the payment was received, the payment method used, where the funds were deposited, and what products or services were sold. Sales receipts can be useful when recording daily sales from a point of sales system. There's a link above to our tutorial about recording daily sales using the Z-Out report. This is a good example of where sometimes people worry that they're missing details, but they're not. In this sales receipt for Etsy from December 20th, 2025, we can scroll down and see the products that were sold as income and the transaction fees and payment processing fees, which are expenses, recorded as negative numbers, so they are subtracted from the total amount earned from the sale to give us our net income. We don't need to record the name of each customer because the Etsy platform already captures those details. We're more concerned with accurately recording the income and expenses for each Etsy transaction. To create an invoice, you'll click on Create and then Invoice. You'll enter the customer's name and email address, which in this case is LC Flowers. You'll also specify the payment terms, which control when money is expected, which could be due immediately or 60 days later. We'll set this for net 30, and the invoice date is December 18th of 2025. You'll add the products or services that were provided, which in this case is services for $250. And you can turn on which forms of payment you accept by clicking on Manage, then Payment Options. From here you can turn on credit card, bank transfer, or PayPal. In this case, we only accept cash or checks, so all these payment forms will be kept off. You can email the invoice to the client by clicking on Review and Send. When you receive payment for an invoice, click on Create, then Receive Payment. From here, you'll select the customer's name, which in this case is LC Flowers. The payment date was December 23rd. She paid using cash, and the funds were deposited into the Chase checking account. She paid the full amount of the open invoice, which was $250. This clears accounts receivable and records the funds to your bank account. This step is very important to avoid double recording income. In the bank feed, when a deposit shows up, you need to match it with a sales receipt or invoice. Here we have a deposit for $162.65 that occurred on December 20th, 2025. We're going to match it with the sales receipt from Etsy on that date. This moves it from the bank feed to the checking account register. We can also see the $250 deposit that occurred on December 23rd, 2025. We're going to use a match feature again to match it with the invoice from that date. If you're receiving cash that is not from the sale of goods and services, then the deposit feature can be used. This would include grants or donations, which are not sales items. It could also be used for one-off income, so you don't need to record detailed customer information. Deposits are not a shortcut for sales. Let's take a look at how to record a deposit from the bank feed. In this example, there were donations from 2 individuals which totaled $50. We'll split this transaction by clicking on the drop-down arrow and then split. And we'll add the name, category, and amount for each person. So we have Emma Davis, and the category was donations for $25. And we also have Austin Davis using the same category of donations for $25, and then we'll split and post. We're recording basic information about each person, and we're not going to send them a record because it was provided through an outside donation program. Now, let's dive a bit deeper into frequently asked questions about sales receipts and invoices. Can you convert a sales receipt into an invoice? Those are two different types of transactions. A sales receipt shows money received, while an invoice shows money owed. If you want to use an invoice instead of a sales receipt, you'll need to delete it and create an invoice. To delete a sales receipt, you'll click on the drop-down arrow and then select delete. Yes, we want to delete the sales receipt. Can you convert an estimate into an invoice? Once a customer accepts your estimate and you're ready to bill them, you can convert it to an invoice so you don't need to re-enter all the details. You also don't have to worry about missing an item if you had to create the invoice from scratch. And you have a record of the estimate in case any revisions are needed on the invoice. For example, if the scope of the project expanded. From the sales transaction screen, we'll filter by estimates. And here we have the estimate for Milagro Lopez that was accepted. So we're going to mark it as accepted by clicking on the drop-down arrow and then mark accepted and then click OK. And then we'll convert it to an invoice and then save. What is the purpose of a statement? A statement shows what a customer still owes you. Let's say a customer is being billed a fee for paying late. The customer received the original invoice, then you create an invoice for the late fee. Instead of revising the original invoice and adding the late fee, you can send a statement which captures all of those details by clicking on the drop-down arrow and then statement. Then you can select the recipient, add their email address, and save and send it. In this case, we're going to take a look at it. Here we have the original invoice for $130 and $15 for the late fee for a total due of $145. You are leaving the original invoice intact. How do I record two forms of payment on a sales receipt? In QuickBooks Online, you can only record one payment method in a sales receipt. So you would need to create two sales receipts and select the payment method used. It doesn't matter how you split the products and services line, as long as you're capturing the correct total amount between the two sales receipts. Knowing whether to use a sales receipt, an invoice, or deposit comes down to how your business receives money and how you want your records to reflect reality. Many businesses use a combination of these tools, and the key is understanding when each one is appropriate. If you're a business owner or bookkeeper who wants clear, dependable QuickBooks Online guidance you can trust, subscribe and use this channel as a reference whenever you need it.